Everyone was screaming, if the Bank of Japan raises interest rates, the markets will crash. Stocks down, Bitcoin down, chaos everywhere. But guess what? BOJ just raised rates, and nothing happened. No crash, no panic. So what's going on? What is yen carry trading? Here's the deal. For years, traders borrowed cheap yen at near zero interest, then invested in higher yield assets like U.S. stocks, bonds, or even crypto. That's called the yen carry trade. The fear was if Japan hikes rates, suddenly borrowing yen isn't cheap anymore. Traders unwind positions and boom, global sell-off. The twist. But when BOJ finally raised rates, the market shrugged. Why? Because this move was already priced in. Traders saw it coming, adjusted their positions weeks in advance, and the shock factor was gone. Markets hate surprises, but this wasn't one. Also, the hike was tiny compared to U.S. interest rates. Even after the increase, borrowing yen is still cheaper than borrowing dollars. So the carry trade isn't dead. It's just less juicy. That's why stocks didn't crash and Bitcoin didn't nosedive. So the lesson here? Markets don't move on headlines, they move on expectations. By the time you hear the news, big players already made their moves. That's why the big crash never came. If you want more breakdowns of how global events really affect your money, hit follow and share this with a friend who still thinks the BOJ controls Bitcoin.